All right, ladies and gentlemen, want to introduce our next speaker here at the Cyber Expo, Andrew Keene. And want to talk a little about Andrew really quick, let you know a little bit about him. He's also, just like how Peter Nigerian and Dr. J were, our previous speaker that was there earlier, but Andrew Keene also was an independent equity options trader at the Chicago Board of Exchange, has over 10 years of experience, does the same thing similar like I do. He also runs his own professional trading room. I was actually fortunate to he let me in there to do a couple of speakings in there. I've seen him doing some great options trading. And once again, I was also, I would say about 2 years ago, was on the board with him on a panel talking about trading. So very happy to have him here today. I know he has another event to do after this. In the meantime, I don't want to take too much time from him. And then don't forget, we have two more great speakers that are going to come right after him, and that will be Tom Busby and Norman Howard. So without further ado, we pass the mic over to him. Andrew, the stage is all yours.
Hey, thanks, Fausto. I want to thank Fausto first for having me. This is my first Cyber Expo I've spoken at, so hopefully you guys enjoy it. I've actually been listening for hours, and I've learned some valuable information that I didn't know before. You know, I always say knowledge is power, and if you guys can learn from all these wonderful speakers, you know, it will help with your trading plan. So hopefully you guys are having a good time so far. I hope to give you guys some more value added into your trading plan. And we're going to talk about the secrets of a market maker. I was a market maker on the Chicago Board Options Exchange from 2001 to about 2011. Market makers get bad reputation for taking advantage of customers, okay? And there's certain ways that we did take advantage of customers, but we do want customer business. So as a market maker, I'm no longer a market maker, I am a market taker, okay? I trade equity options predominantly. 90% of all my trading is equity option based. I'm a pretty big size trader. I trade between about 1,500 to 2,000 options a day. And this year I started my account. I was trying to pull up Interactive Brokers, and I guess they're having some software issues today, or they're doing an update. I started my account this year with $220,000. I built it up to $540,000, and now it's off the highs. It's at about $420,000. So I've had a rough couple weeks. This week I lost money. Last week I lost money, but I have almost doubled my trading account this year. You know, I was a market maker for so long, so I know how the market makers think. I know how they make money. So I'm going to teach you guys today what a market maker does, how market makers actually make money, and then at our workshop, we're going to teach you the tricks to take money from the market makers. That is one of the most important things, to take money from them, okay? They've been taking money for you for so long, now it's time to get back at them and start taking money from the market maker. So my name is Andrew Keene. I've been trading for about 13 years now. Professionally. I graduated from the University of Illinois, Champaign-Urbana, fighting Illini. We did not make the NCAA tournament. And basically, I made money every year before the year before. And then I had a stock AMAG biotech company that I lost, basically blew out my whole account. I lost almost $500,000, $489,600, I think, I have my statement from Goldman Sachs. Took some time off, cleared my head. I came back. I thought I could make money. I was confident I could make money. I had $50,000 to my name. That's it. My last $50,000, and I said, I think I can make money. I'm confident in myself. I've made money before in the past. I've learned from my mistake. If you guys, I always say everything in life is either a lesson or a blessing, and me losing that $500,000 was actually a blessing in disguise, because I turned my last $50,000 and I turned it into $5.5 million. I was a market maker on the floor of the Chicago Board Options Exchange for a decade. When I moved from the trading pits to upstairs just means I have an office. So I'm just like all you guys now. I used to be a market maker, now I'm a market taker. I just got a new setup. I have 8 monitors and a computer, a custom-built computer, and I'm trading all day long. Okay, so I'm just like you guys now. I have taught thousands of students, from students to full-time traders, okay? I always believe in paying it forward, and when I was younger, I used to always say, those who can't do, teach. And as I get older in life and realize that if I do not teach my experiences and what my knowledge is, as much as everybody, all these other great speakers have done, right, then it took me about 10 years to get up to about $5.5 million over the course of my 10 years. Yeah, I made $5.5 million as a market maker. Now I'm a market taker. This year I've doubled my account almost. took my account. I'm up 200,000 in the first quarter, so that's pretty good. So, you know, if I don't teach my knowledge, you know, if I do pass away, everybody passes away at some point, the knowledge will be gone. So I believe in paying it forward and teaching you guys. I made it such a successful career trading. I want to teach you guys the secrets of a market maker. I'm a regular contributor. I'm sure you guys have all seen me on CNBC, Bloomberg, Fox Business. I was on Fox Business 3 times last week. CBOE TV, Sky Australia, BNN Canada, WCIU, CBO TV. They don't put people on TV if they don't know what they're talking about, because it is live, and sometimes they don't tell you what they're teaching. They're going to ask you, and then you kind of got to wing it. So I know enough about everything in the stock market. You know, I consider myself a stock market junkie. I trade all day long. The first thing I do when I wake up in the morning is I turn on CNBC. I know that CNBC, I worked at the CBOE. So I knew, you know, in the morning, I know that the ticker with real stock ticking going across the tape doesn't start till 7 a.m. Central Standard Time. At about 6:48, they just have the ticker going on CNBC straight across the board. Then at 7 o'clock, they show you what's moving and shaking. So, you know, I'm a stock market junkie. I watch CNBC in the morning. I trade all day long. I go to the gym. Then I go home. I watch Fast Money and Mad Money every single day. And then, you know, I look at the futures markets. And then I'll trade Forex at night if I want to. So that is my profile and bio here. So the secrets of a market maker. This is the best time in history to be a retail trader. Okay, and if there's one number I can institute to everybody's head, it's 90%. 90% of everybody that trades loses money. That is unfortunate. Okay, if there's 1,000 people in here, let's say, only 100 of you will make money. Okay, if you had a lineup of 10 people, only one person would make money. That's pretty sad, but that's the truth of the matter. Okay, so I'm going to teach you guys some of the secrets and why this is the best time in history. And then we're going to talk about taking money from the market makers. Why is this the best time in history to trade options? Simple and easy. 3 reasons. Number 1, the markets are tighter than ever. I watch a lot of old school options, DVDs. I read a lot of books. I read probably a book a week. And, you know, Lawrence McMillan, who's, in my opinion, the best option educator in modern age, you know, over the last 25 years, he always talks about options. And he used to do these DVDs, say the market's 7 bid at 770. If I pay $7.70, the stock has to move $3 just for me to break even. So this is the best time in history to be a market taker, a retail trader. I was a market maker. The market maker business does not exist anymore. There was 10,000 people on the trading floor 6 years ago. There are 1,000 people on the trading floor now. Okay, I wish I could be a market maker, but I can't be a market maker. It's $10,000 a month for seat lease. I think about $8,000 a month for seat lease. Commissions are too high. The market maker, being a market maker is dead. Retail traders where it's at. Anybody with internet connection can get hooked up and start trading immediately. Penny wide markets. If you guys want to trade penny wide up markets, awesome. Apple, Tesla, Facebook, Twitter. Okay, the markets are tighter than ever. Imagine going to Vegas and not giving up that theoretical edge to the house. Okay, it's like trading without edge. Stocks are penny wide. Options are penny wide. And more liquid. This is the best time in history as a retail trader because the markets are very, very liquid. So you guys, if you guys are trying to make money, trying to make a successful career trading, you should be thankful for all these things, okay? This is great opportunities for you. Volatility creates opportunity, and we're going to talk about that more here in a second. Why is this the best time in history to trade options? When I started on the floor of the CBOE, I went into the General Electric pit. General Electric was my bread and butter product, okay? For over 3 years, that's how I made my money. I traded about 12 to 16 stocks, okay? Currently, right now, there are 8,700 stocks, okay, that are publicly traded. 4,200 of these have options, okay? 42 of these 8,700 have options. Of these 4,200, there are 320 weekly options, okay? So this creates great opportunity for you. When I was on the floor, I could only trade what was in my pit. Now, one click of the mouse, you can go from long to flat, flat to long, and long to short, okay? So this is the best opportunity. I've never gotten an elevator in Chicago. Chicago is the best place in the world to trade. It was voted in Traders Monthly as the best place to trade in the world. I walk around, it's all traders everywhere. You never ever hear a guy that says, I had the best day ever, the stock market didn't move. Okay. Volatility creates opportunity. You guys can trade options in 4,200 stocks. More products, more opportunity. Simple and easy. The CBOE publishes all these weekly classes. This means there are 52 expirations. I used to get excited every third Friday of the month. There was expiration, okay? Now, whatever kind of trader you are you a swing trader? You can swing trade options in Facebook on the weeklies. You can credit spread. If you're a credit trader, you can sell credit spreads, credit bull put spreads, credit bear puts call spreads every single week. Are you a covered call trader? Great. When I was on the floor, there wasn't weekly options. Weekly options are great, and it creates more opportunity and more products to trade. When I say the markets are tighter, that means when I used to trade Apple, I'd be $1 to $1.20, 500 up. Now the markets are 114, 116. Okay, so you can get in at a better price point. Imagine going to Bloomingdale's. I like to go to Bloomingdale's, right? I want to buy a pair of jeans. Imagine them getting them, and Bloomingdale's not taking a huge profit margin. Okay, the profit margin is tighter for market makers. So before we know how we can take money from the market makers, let's talk about what a market maker is. A market maker is someone who is willing to put a bid-ask spread on any given option, okay? A market maker is willing to buy at one level and sell on a different level. So let's say Apple's trading $530. The Apple December 550 calls are 25 bid at 25.30, 20 up. What does this mean? It means the market maker is making a market. They're willing to buy 20 at $25. They're willing to sell 20 at 25.30. Okay. This is really, unique because not many places there's a buyer and a seller. And let's say I go into a bar and a beer is $4. I can't say to the bar, hey, I'll sell you a beer for $3 because you're selling it for $4, right? It doesn't work like that. So most places, buy wholesale for prices we can't get, and then they sell it out more expensive. The market maker is willing to make a bid-ask spread. So this is one of the three ways a market maker can make money. Buying the bid, selling the offer, okay? Compare this to a currency exchange. Currency exchange is the simple, easiest example of a market maker. What does a currency exchange do? They buy the bid, sell the offer. They try to do that as many times as possible. They make money. Market makers the exact same way. Let's say I'm going to Spain and I want to have some euros. I don't want a whole lot. I just want to start out there. I want $100 worth of euros. Because when I land, I know I want to get a glass of red wine, maybe a croissant. Let's say I'm going to Spain. I want to get some paella. The ATM fees are pretty high. So I go to the currency exchange and I say, here's $100 US. How much can I get euros? He looks, he goes, I'll give you 120 euros. Okay? It's probably higher now, but he says, I'll give you 120 euros. You go, fine, give me 120 euros. Here's your $100 US. Then my buddy from Madrid flies in. He's got euros, and he wants US dollars. So he comes and says, hey, I have 125 euros. How much can I get US dollars? The guy goes, I'll give you $100. So what the currency exchange is doing is just buying a bid, selling the offer. They're trying to do it so many times over and over again. So the market maker is willing to make a bid on an option and an offer on an option. When I was on the trading floor and I was the biggest independent Apple trader in the world, I would alter my size. I wouldn't always be 20 up. Maybe I'd be 100 on the bid and 20 on the offer. I'd be 20 on the bid or 100 on the offer, okay? So simple and easy. We now have one way a market maker can make money, the bid-ask spread. That's their profit margin. They can buy the bid, sell the offer, and do this over and over again. They'll always make money. Perfect example. I traded Microsoft in Yahoo when Microsoft made a $35 bid for Yahoo, okay? I get a phone call at 5:30 in the morning. I pick up the phone. I go, I'm sleeping. Hello. I get up at usually like 6:45. Hello. It's my backer. He says to me, hey, Microsoft just put a $35 bid out for Yahoo. I was like, what time is it? He goes, 5:30. I go, great. How does my position look? He says, you're going to lose $48,000. Perfect. Start of the day, about $48,000, okay? I go in there, and I traded. That was probably my best day I've ever traded during the day, okay? Not position, just the way I traded. I made over $52,000 trading Yahoo that day because there was a lot of action, okay? There was a lot of volatility. There's a lot of customers that wanted to trade the possible Microsoft Yahoo takeover, okay? So I made $52,000 buying the bid, selling the offer over and over again, okay? So this is one way the market maker can make money. Let's look at another way the market can make money, okay? And this we compare to a jersey store, okay? Let's say I own a jersey store. And when I teach education and I teach trading to, all my subscribers, I like to make it in real-world situations, so under things that you guys can understand, okay? Currency exchange, everybody knows a currency exchange. Everybody's dealt with a currency exchange. So let's think of a jersey store. At the beginning of the year, a jersey store will buy jerseys, okay, of every single player in the NBA. They will buy all of the jerseys. They know LeBron James and Derrick Rose is probably always going to sell out. It doesn't matter if Derrick Rose is out for the year, okay? Derrick Rose will always sell out, okay? So they make money on those things all the time. Then there are other jerseys. They don't know who's going to get hot and who's going to get not. 2 years ago, Jeremy Lin got really hot. Those jerseys were selling for 3 times the price, okay? So those jerseys went up in value. And this is implied volatility. So if you are a retail trader and you're trying to trade implied volatility, good luck to you, okay? You are not an expert as a retail trader. Stop trading implied volatility, looking at implied versus historical volatility. Leave that to the market maker. Just like the jersey store. The jersey store cannot control who gets hot, okay? Just like the market maker does not control the order flow, okay? Those comes from the institutional firms, hedge funds, mutual funds, retail banks, and big traders. What happens if Dwight Howard leaves the Lakers and goes to the Rockets, which he did? I'm going to have to sell Dwight Howard jerseys at a discount, okay? I am a man. I know I don't like to make mistakes. I don't like to admit that I make mistakes. So when I do make mistakes, sometimes I have to take off a losing position. Sometimes I have to say, I'm sorry, you're right. And one of the hardest things in trading is cutting off losers, okay? Because people don't like to admit that they make mistakes. So the second way a market maker makes money is on implied volatility, okay? They want to make money by buying cheap volatility and selling more expensive volatility. But what I've learned from the trading floor, at some point, maybe I have to sell it for a loser. I have all these Dwight Howard Laker jerseys. I have one of 2 choices. I can just let them sit there and I'm losing money, or I can try to sell them for a discount. So don't always feel like every position is going to make money. Okay, let me give you a perfect example. Anybody that says X percentage of my trades are winners, that doesn't make sense to me. I do not care what percentage of my trades are winners, okay? All I care about is bottom line P&L, okay? I don't track what percentage of my trades are winners. If someone said to me, Andrew, I'll give you $1 million. I want you to trade with it, and I want 95% of my trades to be winners. I would say, simple. That is easy. I can almost guarantee you I'd make 95% of your trades winners. I didn't say you would have a profitable year, but I would sell a $1 call spread for 1 penny. 99% of those trades are going to be winners. So stop thinking about how many trades are winners and think about P&L. Another sort of perfect example. I was actually speaking at the Money Show in Chicago. Somebody raised his hand. What percentage of your trades are winners, Andrew? I said, it doesn't matter. He goes, what do you mean it doesn't matter? And I said, I'll give you a perfect example. I have 3 trades on. I'm risking $1,000 per trade. Trade 1, I lose $1,000. Trade 2, I lose $1,000. Trade 3, great trade. I make $5,000, okay? So I had 3 trades, 1 winner, 2 losers. Does that mean I'm a losing trader? No, because my net P&L is higher. So stop thinking about what percentage of trades are winners and look at profitabilities. That's all that matters. Let's go back to the Apple example here. And if I was 20 up, and let's say there's 2 different customers, okay? Someone comes in, sells me my bid, so I buy 20 of them at $25, and then I sell those out because another customer comes in to buy them. So I could buy 20 at 25, sell 20 at 25, 30, and I can make $600. And if I could do that over and over, just like the currency exchange, I would make money in the long run. So market makers can make money in one of three ways. A market maker can make money on the bid-ask spread. Okay, we just talked about that, just like the currency exchange. A market maker can make money on implied volatility from buying cheap implied volatility and selling more expensive volatility. Okay, so that's the second way. So we now know two ways a market maker makes money. To understand how to take money from them, we have to understand how they make money. This is a perfect example here in Facebook. Let's say I sell some Facebook weekly calls or some April calls. As a market maker, I sell 20 of the Facebook April 70 calls. As a market maker, I always want to be delta neutral. Now that I've moved up sales and I became a retail trader, I'm directionally biased. On the trading floor, we are never trying to be directionally biased. We always want to be delta neutral. So let's say 1 week goes by and Facebook implied volatility has gone lower. Then I will profit on that trade. Okay, so simple and easy. I want to sell an expensive implied volatility and buy a cheaper implied volatility. That is another way that the market maker makes money. The last way a market maker makes money is time decay. Okay, so the three ways a market maker makes money. Number one, bid-ask spread. Number two, implied volatility. And number three, time decay. In general, when I was on the trading floor, I was always a seller of options. We used to have a thing called when in doubt, hands out. What does that mean? I'm always a seller of options, knowing that options in general are overpriced because they're just like insurance. You guys have insurance on everything, okay? Let's say I pay insurance for my car. I pay $1,200 a year for my car. I can break that down. What range of VIX levels would you trade an option? That's a different story. VIX, you have to line up to the futures, not to the spot. I'll tell you that. So in theta, otherwise known as time decay, if I pay $1,200 for my insurance for 1 year, okay, you could just write a check one day for $1,200 for the year, but you're actually paying it every single day. You could take that $1,200 and you could divide it by 12 months of the year. And you can say I'm actually paying $100 a month for my car insurance. If you wanted to break it down even further, you could say I'm paying about $3 a day for car insurance. If you wanted to break that $3 a day into hours, you could say I'm paying about 12 cents an hour for car insurance, okay? How does a car insurance make money? Just like Warren Buffett, okay? Just like Warren Buffett took the insurance on the perfect bracket, right? They provide insurance and they collect premiums. So as a market maker, this is how I can make money. If I'm a seller of options, I'm long theta. I get paid every single minute, every single hour that goes by where the stock doesn't move. Okay? So just like a insurance company, a market maker can make money on theta. So we now know the three ways that a market maker can make money. They can make money on the bid-ask spread. They can make money by buying a cheap implied volatility, selling a more expensive volatility, and they make money on theta. Three real-world analogies we can say. A market maker is similar to a currency exchange. They are similar to a jersey store, a jeans store, whatever you want to say, and they are similar to an insurance company. So, who can be a market maker? That's a great question. Does this seem like the right business for you? Well, I'll tell you this. When I left college in 2001, I was lucky enough to join a trading firm that taught me how to trade. I work for a trading firm called Botta Capital Management, B-O-T-T-A, okay? B-O-T-T-A. You know how they got their name? The people that started the company call themselves the best option traders there are. No joke. B-O-T-T-A, okay? Best option traders there are. And I started as a clerk. 14 of us started as a clerk, okay, with the chance to trade. We have people from, I went to Illinois, USC, Indiana. We had a guy who went to Harvard, not Hartford. He went to Harvard. He never got the chance to trade. Out of 14 of us, only 3 of us got the opportunity to trade. Okay? So it's a very competitive world. Okay? The best thing about trading, I always say, two things. Sky's the limit. Okay? I can make or lose $20,000 to $30,000 in a day. Simple and easy. I've probably done it 10 times this year, maybe even more. Okay? I can make a lot of money in a short period of time. And you can't blame anybody else. You can't say it's someone else's fault. You work in corporate America, you can blame so many other people, right? But you can't blame anybody but yourself when you're trading. Of these 14 people, okay, of these 14 of us, 3 of us got to trade. I woke up at 5:40 every single morning, took the train to the city because I couldn't afford the city. I was living in the suburbs with my parents, unfortunately. Okay? Took the train in every morning. And you know, like little kids, everything is why. Okay? Why? And I was that kid. Okay? Every single day, the person that I was shadowing, okay, would always stop. He's like, literally stop, leave me alone. Okay? Because I would always say, why? Well, what happens if dividend does this? When do I exercise the calls? Why are they buying these? What do we do with implied volatility here? Should we look at historical volatility? This and this. Okay, I'm always asking questions. And I, got a lot of knowledge. We had class every single day. Class every day. We had tests once a week. Mock trading after the close. I should say mock trading after the close if the traders decided that they didn't want to play roulette, blackjack, and craps for money. No joke. One guy at the firm would be house, and they would play blackjack, roulette, and craps for money after the close. Gamble all day, and then play it after the close. My firm does no longer exist. Okay? Voda Capital Management eventually went insolvent, unfortunately. There was 100 traders at our top. Out of those 14 people, 3 of us got to trade. Out of those 14 people, only 2 of us currently trade. I trade, and then my buddy just launched a hedge fund for about $30 million, I think. So only 2 of us got to trade. So when I institute that number, and I talk about 90%, right? 90% of everybody that trades will lose money. We started with 14, and only 2 of us are trading now. So that is in the 90% number. Why is this the best time in history to be a retail trader? Okay. When I was on the trading floor, I was the biggest independent Apple trader for about a 3-year stretch, 2006 to 2009. Okay. When I was there, I made almost $1 million 2 separate years just in Apple. Just in Apple. I wish I could be down there still trading Apple. Unfortunately, time changes. Things evolve. There's new wave of trading. Trading that existed 6 months ago doesn't work anymore. Okay. If you guys want to change your trading plan, sure, there's some people in here that are trying to trade. There's some people that have been trading for 20 years. You have to evolve with the times, okay? If I sat here and said, when I left as a market maker, I started becoming a retail trader, I had portfolio margin, but I was a retail trader, and I just made money every single day, that would be a lie, okay? For me to move from the trading floor as a market maker to now my trading style, I lost money at the beginning, okay? I'm just like you guys, okay? There's 4 stages of a trader. The first stage of a trader is you lose a lot of money. And that is usually how it happens, okay? When I left the trading floor, I didn't realize the new wave of trading. It was different. I had to be more patient. I had to do something called R&R, and it's not rest and relaxation. It's risk and reward, okay? When I was on the floor, and I always talk about it, I was like a cowboy down there, okay? Just shooting away. Because I didn't care if I was down 20 grand in one position, because I'd be up 30 in a different position. In 2007, 2008, my P&L swings were $20,000 to $30,000 a day, and probably $100,000 per week. And that was 80% of it was my own money. Okay, but now that I've moved upstairs, I have to evolve to the new wave of trading. Okay, that's when I always give examples, and I talk about stocks and trade. I talk about things that happened in the last week, real-time situations. I don't talk about charts or stocks from 6 years ago. Okay. Right now, my biggest position is rig Transoceans, and I'm losing a lot of money in it. I had an account that I opened this year. I put $220,000 in there, and I got it up to 540, and now it's sold off. Okay, now my account's about 420,000. One of the things in trading, you got to realize when from long to short, short to flat, flat to long. With one click of the mouse, you can take off any position you want. And I'm sure everybody's had a losing trade. And what happens when you have a losing trade? You just sit there and you stare at the thing, rooting for it to go in your direction. Okay, that's not how trading should be. I try to take a lot of the motion out of trading. Okay, I try to take the motion out of trading. So I'm going to give you a little secret here. The market maker actually wants you to make money. Believe it or not, the market maker actually wants you to make money. And you say, I don't believe you, Andrew. Okay. Rig is a long-term buy. Good. Yeah, I've rigged puts, and I'm not doing very well. But the market maker actually wants you to make money. Simple and easy. Why does the market maker want you to make money? Because if you make money, you will come back as a customer, just like a currency exchange. Okay. The more customers there are, the better it is for them. Okay. So they actually want you to make money. I'm not going to sit here and tell you, as a market maker, we didn't take advantage of some customers, okay? Maybe taking advantage is a bad word. It's not like we did anything illegal. But there are tricks of trading options that you guys don't know that I'm going to teach you in our workshop that's going to save you hundreds, if not thousands of dollars in your trading. So let's talk about the market maker trade here. Apple is trading $530. A market maker, let's say you guys buy the December 550 calls from me for $25.30. The stock is trading $530. As a market maker, most market makers try to be delta neutral, okay? Because we know the three ways the market maker makes money: bid-ask spread, implied volatility, and theta. So if I was a market maker and I sold 20 of the D's 550 calls for $25.30. Oh, I will talk about that in a second. 20 of the D's 550 calls for $25.30. What I would do as a market maker, I would then go buy stock to hedge my position. If you guys don't understand the schematics around it, don't worry about it because you are not a market maker. Let's say 1 month has gone by and the stock has rallied $5 to $5.35. How do you and the market maker both make money? And we're going to go over that here in a second. So there are 4 stages of a trader. The first stage of a trader is you lose a lot of money. Unfortunately, you lose a lot of money. The second stage of a trader is you lose, but you lose less money, okay? So you're like, oh, I'm doing better. I used to lose a lot of money, and now I only lose a little bit of money. I'm doing pretty well. The third stage of trading, stage number 2. You guys all want to get to stage number 1, right? So stage number 2. In stage number 2, talk about that in a second here. In stage number 2, you start making a little bit. Wow, I'm starting to actually make money trading. Okay, and not enough where I can quit my job, but I'm actually starting to make money. And stage number 1, which is the best stage, is you continually make money. Okay, when I go out and I meet people and I tell them what I do, they say, why would someone pay money for your trades or to watch you trade during the day? I said, to be honest, I'm really good at what I do. Okay, so simple and easy. Stage 1 is I continue to make money year after year after year. And I haven't made millions of dollars from getting lucky, okay, trading. And have I gotten lucky on some trades? Of course I'm going to get lucky on some trades. But I'm consistently making money, okay? There's a reason that I always compare it to poker players, okay? The best poker players in the world, Phil Ivey, Phil Hellmuth, some other names, Tom Dwan, if you guys follow poker that well, okay? They consistently make money. Yes, they could lose money in a short period of time. If I'm going to sit here, I'm going to tell you guys I've never lost money in a day before. That's not true. Have I ever lost money in a week before? Absolutely. Have I ever lost money in a month before? Absolutely. But I say it's a marathon. It's not a sprint, okay? It's a war. It's not a battle, right? So I know over time I'm going to make money because I'm a really good trader. Okay? I define risk versus reward well. I take good setups. I don't get emotional when I trade. When I lose money, I don't get emotional about it, okay? It's just trading, okay? You're not going to make money every single day. If you think you're going to make money every single day and you can't take the, frustrations of it, then you shouldn't be trading. I talk about this all the time. 80% of trading is actually psychology, okay? And, you know, we have a huge subscriber base, and some people just freak out when they're losing a position. If I'm losing in a position and I don't like it, I'll just click my mouse and get out, okay? Not every single trade is going to be a winner. So when you have a losing position, how do you handle that stress, okay? I've been trading for 13 years now, okay? So I handle stress very well. I don't get mad if I lose money because I know in the long run I always make money. Okay, so how do you handle those losers is going to help you with your trading a lot. If you're someone who can't stomach losing $1,000 on a trade, you're trading too big. We have a question here, and someone says, why would you buy 2,000 shares of stock? As a market maker, I hedge my position delta neutral. So if the delta here is 50 and I sell 20 of them, 20 times 50 is 1,000. So the proper hedge as a market maker is 1,000 shares. If I sell 100 options with a 35 delta, okay, 3,500 shares of stock. So the market maker always hedges himself delta neutral. So they have to look at the delta option and then they hedge themselves accordingly. This is me on the trading floor. I'm on the right here. That was my backer for 3 years. And he actually shares an office with me still. Unbelievable trader. I learned a lot from him. We can see we have CNBC on in the background, and then we have all the screens up there, okay? So the trading floor, and everybody, you know, that always asks me about the trading floor, and they are mesmerized by the trading floor, and it's really cool to see, but there's no one down there anymore. It's like a ghost town, right? Because everything has come electronic, which is great for all you guys, okay? I talk about being upstairs. Internet connection and computer, and you can start trading. When I was on the floor, I was paying $8,000 a month for a seat lease. Okay? $8,000 for a seat lease. Well, I was trading, so when I was with my trading firm, it was their money, so they backed me. And then when I traded with this gentleman, Craig, it was all his money, so he put up the money, and 80%, I was in an 80-20 split. I had no salary, and I got 80% of everything I made, okay? So I got 80%, he got 20%. You know, if I have $500,000 in my account, in theory, 80% of it's mine and 20% is his. But he puts up the initial capital for me to trade. Let me tell you something about this. When I was on the trading floor, Ed Tilley is his name. He is the CEO of the Chicago Board Options Exchange. He personally backed me with his own money for about 2 years. Okay, he is the CEO now of the CBOE. Okay, I had 2 backers, a gentleman in the picture, and Ed Tilley. They started a firm to back me and my other friend who now runs a hedge fund. Okay, so I was with Boda, and then they left. We opened a group called Cattle Group, Keen, Andrews, Tilley, and Luce. So if that's not confidence of my trading ability and how good I am, that the CEO of the CBOE backed me for years. So let's go to this example here. And let's say you guys bought 20 of the Apple. These 550 calls for $25.30. The market maker sells you them and buys stock. 1 month has gone by. The stock has moved up $5 in value. Okay, $5 in value. So you now sell your calls that you bought for $25.30 to the market maker for $27. And you say to yourself, ha, 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 I got you, market maker. You sold me these things for $25.30. Now they're worth $27. I made $1.70 on a 20 lot is $3,400. Okay, you made $3,400. But what you don't realize is the market maker actually made money as well. The market maker bought 1,000 shares of stock. Stock went up $5, so that's $5,000. And then he lost $3,400. So the market maker actually made $1,600. So it is possible for you and the market maker to both make money. Why? Because the retail trader trades options directionally biased, usually, and the market maker is just trying to make money on those 3 things we talk about: bid-ask spread, implied volatility, and on-time decay. So in our workshop, we are going to teach you the ways to take money from a market maker. If you guys are a beginner option trader, you trade 1 option a day, or you trade 1,000 options a day. This workshop is a no-brainer. And I decided today for you guys taking time out of your day. I appreciate you guys coming. You know, you have a great audience today. I'm going to give you one for free. Okay, I'm going to give you something for free today. And this is value added for anybody that trades options. This is called free advertising. If I am driving on the highway, I see an advertisement for a billboard. I see an advertisement for a dentist or a lawyer, or I advertise on Facebook or Google. There is no such thing as free advertising. However, in the option market, there is something known as free advertising. The exchanges put in a rule called quote-unquote customer priority. What does that mean? It means that the customer automatically gets to trade before the market maker. Okay? Imagine you go to a bar. The bar's inside selling beers for $4. You set up shop outside and you say, "I'll sell you beers for $4 before you walk inside." That doesn't work anywhere. Okay? Let's look at a perfect example. XYZ is trading. The options are $1 to $1.30. So XYZ is $1 to $1.30. If I offer calls, let's say I'm long these for 80 cents. Okay, let's say I'm long these for 80 cents, and I want to sell some for $1.30. I would put my offer in, okay, because if they trade on that level, I automatically get filled before the market maker. Okay, I get filled before the market maker. So if I bought these for 80 cents, let's say I bought 20 of them for 80 cents, I would sell 10 of them for $1.30. I advertise for free. Okay, I don't have to pay anything for that. And then if they trade at all, I get filled before the market maker. Unbelievable rule. I'm sure no one in this room knows about it, but I automatically get filled before the market maker. When I was on the trading floor, I actually had to testify with a microphone and 3 lawyers because they thought I traded in front of the customer, which I didn't. But the exchanges encourage customers to trade. So you will get filled before a market maker. So every single morning, I put offers out there. If I'm willing to take off an option position at a certain price, I always put offers out there. We call this free advertising, okay? I will get filled before the market maker. And like I said, imagine at a bar, okay? They're selling beers for $4 inside. I sit outside and I say, "I'll sell you this beer for $4 before they do." That's never going to happen in the real world anywhere but trading, okay? And this is a great rule for a retail trader. The exchanges have put in rules to entice retail traders to trade. Okay. Also, it works as a FIFO system: first in, first out. Do you need to place the order before it hits? Absolutely. You need to put the order before it hits. So if the market's $1 to $1.30, a different trader comes in and pays $1.30. You have to have the offer out there. That's why we call it free advertising. Let's say the market's $1 to $1.30, 500 up. Okay. If it's 500 up and 10 trade, if I had 10 offer, I get filled before the market maker. Also, first in, first out. If there's a bunch of retail traders, they put in markets. If I'm the first one to offer it out, I get filled first. Okay. So every single morning, I spend about the first 5 or 10 minutes a day and put offers out there on my positions where I'm willing to get out of positions. I never, ever leave good to cancel orders. Okay. Never leave good to cancel orders. And this is one of the ways that we can fight back against that evil market maker. Start taking money away from them. They've been taking money and making money off us for years, if not decades. And this is one of the ways and one of the tricks that we can start taking money from them. So the market maker does need you, though, okay? They are just like a currency exchange, an insurance company, and a jersey store. They need customers. The market maker isn't out to get you. They actually want you to trade. Good to cancel orders I do not use because I like to see if the market moves overnight. So if the stock gaps up, my offer on the options position is going to move. Okay, so my offer is going to move. So I don't use good to cancel orders. I'll use limit orders, day orders, limit day orders. So we have a special course. And we're going to teach you guys all how to take money from the market maker. It will be on April 29th at 8 p.m. And we're going to teach you the tricks of how to start taking money from the market makers. I gave you one today, and it was free advertising, okay? Every single one of my subscribers now uses and takes advantage of free advertising. In the course, we're going to teach you who controls order flow. The market maker does not control order flow. Institutional orders control order flow. Hedge funds Mutual funds, retail banks, and big traders control order flow. I'm going to teach you implied versus historical volatility. I will teach you how to gamma scalp. Option markets are only open from 8:30 a.m. to 3 p.m. Stock is open from, I think, 6 a.m. to 8 p.m. So it doesn't happen very often, but I had an example in December. SYY was up like, I think like $8 before the market was open. I couldn't get out of my option position to 8:30 a.m., but the stock was already up $8. How can I use the stock to guarantee myself to lock in profit on a profitable option trade? We will teach you the spread book, and I'm sure most people don't even know this, okay? But there is a spread book. Every single big discount broker has a spread book, and if you're trading spreads and legging into spreads, you're wasting money, okay? I'm going to teach you guys the spread book and how to guarantee yourself to get better fills than just buying the bid and selling the offer over and over again. Never give up money that you don't have to, okay? I'm going to also teach you, I added a couple things. I added when to exercise calls, okay? This is one of the questions I consistently get. Long stock, you get dividends. Long calls, you do not get dividends. And as a market maker, we used to do something called dividend plays, where we would take advantage of a customer that did not exercise their calls. So we're going to teach you this. I'm also going to teach you how to guarantee yourself better commission prices. I will guarantee you we can teach you a way to get better commission prices. So we have this here, and we're offering it today for $97. I don't know why that's not coming up. Oh, there we go. This price is only available for the next 200 people, and we're offering it at $97. We're offering it at $97. You can click on the link here, keenonthemarket.com/market maker. 3 things I'm going to say about the course. Number 1, it is April 29th at 8 p.m. Number 2, it will be recorded. Number 3, it will 100% sell out. We sell out of every single workshop that we do. And it will be recorded. We'll sell out. And number 4, 100% money back guarantee. Every single workshop I do, 100% money back guarantee. So if you sign up for the workshop and you don't think it's a value add to your trading plan, I'll give you your money back. No questions asked. We did an Ichimoku Cloud workshop. We had 700 people, and only 3 people asked me for their money back. Okay. So if you trade one option, you trade 100 options, you trade 1,000 options, you're interested in trading options, this is it. From beginner to expert course. Okay. And you guys can click on the link below and sign up. If you guys have any questions, I'm willing to answer some questions too here as well. The link is not open. I'll put it in the chat box too. You can sign up. Here's a link that you guys can sign up here. Optionsonthefloor.com/best. Sorry about that. Optionsonthefloor/best. If inexperienced in options, what is the best way to learn from the ground floor? This course is great for a beginner course. It is similar to the April 3rd course, yes. You can just click on the link I'm putting in the box. Oh wait, can we put in to all attendees? Thank you. There we go. Optionsonthefloor.com/best, and you will learn how to start taking money from the market makers. Okay, they've been taking money from us for years, so let's try to start taking money from the market makers. Okay. You can hit this link right here as well. Why such wide spreads on such price line as opposed to other similar price stocks? Well, you know, price line the stock is very wide, so the option market has to be a little bit wider. Okay. So if you guys have any questions about the course or about it, you can click here. Can you put in Okay, so a couple more things I want to talk about, and then I'm going to call it a wrap here. We have a couple more great presenters today. So 3 things here about the course, 4 things about the course. We only have 200 spots at this price. It's available on our website, and on our website it's $197. So it is available on our website. Okay, that's number 1. Number 2, okay, it is going to sell out. So you guys have to sign up now. I put in the link a couple times to all attendees. We will sell out of this. Number 3, 100% money back guarantee. 100% money back guarantee. So if you take the course and you don't like it, I'll give you your money back. I do not want your money if you do not think it's value added. Anybody that trades any options at all will learn from this. You guys will save hundreds, if not thousands of dollars on commissions and taking money from the market makers. Okay, I will guarantee that. And my guarantee will be, I'll give you your money back for the course if you don't think it's value added. Okay, so I want to thank Fausto for having me. It's a great, great crowd today. A lot of energy. I appreciate it. And I will see you guys in the course. Make sure you sign up because we will sell out of it. Make sure you sign up because we will sell out of the course. There it is, optionsonthefloor.com/best. Thanks, guys, and I'll see you in the workshop.